Hey guys, today is Thursday, October 8th, 2020. My name is RJ Angle and thank you for joining me. I wanted to touch base with you guys today because I recently had a learning experience in my journey that was it's a little bit embarrassing, but again, to the point of this entire channel and these videos, I wanted to bring this information and this whole experience to you so that you can learn from it and even offer your advice to maybe help me along the way. But more than anything, I want people who are witnessing this and watching these videos so that if they can see some of the mistakes that I've made, maybe you don't have to live some of these yourself. So yeah, I'm gonna swallow my pride buckle down and tell you everything that I just went through. And today we're gonna be talking about business formations. Now, there's a lot of information that could be thrown at you about business formations, right? There's several different types of those, and they all have different distinct advantages and disadvantages to another. They have different purposes for why they even exist, and there's very different tax implications based on what business formation you're at and even what state you're in, right? So, I mean, we could have classes about what all these different things mean. And I thought that I had done my research and made an educated decision on the business formation I was going to choose. And evidently I was wrong. I'm going to tell you exactly why, because you might end up being in the same boat where you're having some of these same considerations. So I'm just going to speak particularly to my point, and maybe perhaps in a future video we'll go over some of the other business formation types and what that might mean, but I'm going to talk specifically to what I just recently experienced. So in the last year, since the inception of my business, I've been a sole proprietorship, which is really basic. It is the most simplest form of a business formation because I'm the only owner, I'm the only operator of that. I don't have a partner, in which case the equivalent of two people doing this could be a partnership. But I was a sole proprietor, which means that I had a fictitious business name. I was me doing business as the DBA and then my company name, SBC Group, right? And so for the tax implications of that and the liability extended to that, we are one and the same. I am the business is me. If the business gets sued or if there's any kind of legal issue to be pursued there, I am liable because I am the business. The business also gets taxed as me and I get taxed as the business. So all of the income that's generated from that is going to be actually filed through my personal income taxes, and that's the personal income tax rate is actually what I'm going to pay on that because again I am the business, so there's no corporate taxes involved with that. So it's actually the simplest and easiest form. But the thing that kind of gets people hung up is the first thing I mentioned, which is liability. You are liable for the actions of that business entirely, and that extends to your personal assets as well. So you can mess something up if that's the way you want to put it on your business, and they could take your house as reparations to pay off those debts and liabilities, right? Because you are the business. So in what I've been doing up to this point, I felt that my exposure, my liability was fairly minimal. I wasn't too concerned about that. That's not to say that it was non-existent, but I thought that the sole proprietorship mode suited me best, right? I have really very little liability exposure as relative to other industries and services, let's say. Um, but with pondering going full time and my plan in growth and extension and the things I wanted to get into, particularly doing greater revenue, more projects, new regions, all that kind of stuff, I felt like perhaps my liability would be extending. And for that reason, I thought it would be best that I restructure my business and become a single member LLC. Now, an LLC is not a corporation, but it acts very much like one, but only in very distinct beneficial ways. So I would have liability segregation. I would not personally be taxed or responsible for any kind of, well, not for mostly negligent acts on my business's behalf, right? So debts and also legal matters, things that go to court or arbitration, things of that matter. So if there are defaults on payments on my LLC, they're not going to come after my personal assets to pay for that, right? And if I'm in breach of contract for something that I'm doing, or something of that nature, and then I get sued, that they're saying that I caused them harm, that they're, again, um, they're not going to come after me personally. They're going to come after the business and its assets, and the insurance policy for that to cover those damages, but not me personally. And I thought that was good. I'm like, hey, that's great, because it also, as a single member LLC, it's a pass-through entity. The IRS considers that a disregarded entity, which means all of the income is going to be also captured on my personal income taxes, and it's going to be taxed as such, as me. So I avoid double taxation, and then I'm not going to be taxed on the income as the corporation, and then also on the receiving end of that as income for my personal. So I thought, hey, that's great, right? I get kind of the best of both worlds. And I closed my mind off at that point, formed my LLC, trudged down the road, and there's more to that story, and that's what I want to bring to you now. So, LLCs and corporations have to pay franchise and or excise taxes. Sometimes they are referred to as privilege taxes. Why would they call it that? It's a tax you have to pay to, in the state of California, it's called the Franchise Tax Board. A lot of other states have Department of Revenue or things of that nature that they call it. California calls it the Franchise Tax Board. And you owe them money for the privilege of doing business within the state. That's it. You exist. You owe them money. Fantastic. All of your other income is still going to be taxed, and there are different rates and variations, and right, however it is that they calculate that. That's still going to be in addition to, but just because you're there, you're going to owe them money, a certain amount. And most every state has this. Because I live in California, we have some of the highest, so that's great. So there are minimums in California presently, right? This is 2020. The minimum amount to exist as an LLC is $800. Now, based on not your net taxable income, so not your profits, but based on your revenue, just how many dollars you turn, whether you kept any of that or not, you're going to fall into a different tier of what your franchise tax is going to be in California again. So you might want to look into this for your own state and circumstance. But there are 5 tiers in California, and it varies from as low as $800 up to just shy of $12,000 as a privilege tax. So if I revenue $5 million or more, I'm going to owe them almost 12 grand just to be there. Then the net taxable income, everything that I made, all my profit off of that, right, minus deductions and things of that nature, then they're going to tax the income of that as well. Now that's income you're going to pay regardless of what your entity type is. If I'm a sole proprietorship, I'm going to pay that. If I'm a partnership, I'm going to pay that. If I'm an S corporation, I'm going to pay that, but at the shareholder level. If I'm a C corporation, I'm going to pay the corporate income tax on that rate, and then if I distribute that as dividends to the shareholders, they're also going to pay that as personal income tax rate. As an LLC, I'm going to pay that as state income tax. I don't have any federal income tax on that as an LLC. And like I said, perhaps more on that later. So that's unavoidable. Those taxes I'm going to pay. I pretty much expected that. What I failed to take into account is the fact that I have this franchise tax, right? Which is nothing more than that I'm there. They're allowing me to do business under this formation in their state. Now let's compare that to let's take that into consideration of my reasoning for that business formation and perhaps some other options I could have chosen. So I wanted the separation of my personal assets as anything that could be collected for debts owed or reparations from actions on behalf of my business. Doesn't that sound an awful lot like insurance? Because it is. I'm not saying there isn't good reason to have that separation. There absolutely is and can be, but you have to really understand and manage that with the level of exposure your business actually has. Now, I would say mine is relatively low. So it's an $800 minimum in the state of California to be there. If I revenue $250,000 or less, at a minimum I'm paying $800. Conversely, a $1 million professional liability insurance policy is going to cost me between $400 and $500 a year. So it's about half, but it's significantly less. And due to my service, E&O is really all that I need. I'll probably have an umbrella policy as well, which is really standard and fairly inexpensive. But let's just look at the E&O. It's going to be, like I said, half, but a lot less. And it's going to cover all of my liabilities for things that I could be sued for. It's not going to cover my debts to the bank, of which I presently don't have any. So that's great. I'm not concerned about that. So my liabilities, my concern really lied with the performance of my work and how my customers might receive that, or they felt like it was somehow errored and detrimental to their organization. That's the only time that I think I needed coverage, and that's what insurance is for, which is cheaper. It's cheaper than the franchise tax and the privilege tax, right? And like I said, every state has some variation of this, and yes, in California it's very high, but in other states it's around $300 as well, which is still pretty darn close to your E&O insurance. Now, your business, your service, the nature of what it is that you do could be very different. Your exposure might be way higher than mine. An LLC, even as a single member LLC, really might make sense for you. You might have leveraged a lot more, and maybe I should touch on that here in just a second. Perhaps you did get like an SBA loan to start your business. So you do have debt. You owe somebody something. Somebody funded you to get this going. And you might want to be able to separate, okay, well, if my business fails and I default on those payments, maybe I want to kind of get my personal assets away from that liability. A single member LLC, any form of LLC, might afford you the opportunity to do that. Maybe. And I say maybe, because depending on the amount of money that you're borrowing and the terms of that, you're going to have collateral anyways. And more than likely, you had to use your personal assets. Almost guaranteed you had to use your personal assets as collateral for that. And in such case, if you're the guarantor of that and you use your personal assets to guarantee the payment of those things, LLC or not, you're not going to get away from those things. But that's the nature of doing a startup, right? But long story short, actually thinking about this now, I might very well do a series about business formations, go more in depth, and I'll probably break them out one by one about the different types, advantages, disadvantages, consequences of those, just for your benefit to this. But just right here, right now, what you need to know is I messed up. I completely restructured my business, and I never should have. It's going to cost me more money. Now, thankfully, I'm not so far down the road. I haven't done any business as an LLC just yet. I haven't incurred any debts, liabilities, and I haven't actually generated any revenue under that business form. So, thankfully, I can quite easily dissolve that as if it never even happened. That's not going to say it didn't cost me something, but I can stop the bleeding, let's say. And that's more than likely the direction that I'm going to go. And I wish I hadn't gone down this road just to pull it back, you know what I mean? It would have been better had I not done that. So I hope that you can do the same. So I think I will. I will probably put on a series of videos, one at a time, discussing the different formation types, how they work. Because obviously I went into this not fully understanding the implications. I looked at what I thought I understood about it. I thought I was getting the same tax benefits as a sole prop and better liability protection just for the sake of it. And as it turned out, I was going to pay more than taxes just because I changed it. And I would not want any of you guys to lose the lesson of my experience and make the same mistake. So anyways, I know this is somewhat rambling on. I don't mean to do that. If you stuck with me, I really do appreciate that. Thank you so much. And stick around, because yeah, I think I'm going to take this up because this is really important stuff, and I really want you guys to know this and make a right and educated decision. And there's just so much information out there, it can be really hard to cut through the weeds of what it all really means, and maybe, just maybe, I'll be able to clear some of that up for you and help you better understand. I sincerely hope that I can. Some of you out there might know this way better than I do, and in which case I'd really, really, really please encourage that you add your questions and comments or anything that you can throw into this so that you can help educate us as well. I don't have to be the one leading this. I'm going to learn from you just as much. So please do that. And if, as always, please do subscribe. There's so much more than just this to come. and we're all going to help each other and learn something along the way and improve our businesses and our practices and our lives. So I really appreciate that. Stick around. Thanks, guys.